I do like starting these types of things on time, so as long as I can manage through the buttons, might check out my coordination skills here, but I think we're good to go. Yeah, exciting. So first of all, welcome everybody. Really appreciate you taking the time out on your busy schedules to come and join us. This is an exciting day for me because it was actually 11 years ago this month that I started the Bay Area Private Money for Real Estate Investors Meetup group. And that was a group that ended up going, we've been running that now for, well, the last 2 years have been a little bit of a challenge because of COVID and all, but there's just over 4,000 members in that group, and looking to ramp up things and that with that group as well. But this is really a parallel path to what we did in that group. One of the things that really worked out well, I thought, for that group, and I think what made it as popular as what it was, is the fact that it was very collaborative, and it was all about working together and helping each other really thrive and supporting each other to get, so everybody can get where they're going in their goals in real estate investing. And so what I wanted to do with this group, this is more of a closed group. Now, there might be a few people here who came in through Meetup who are not members yet of the investment club. And that's really, the name of it is the investment club. And the goal of that is it's a closed group, but it's only closed from the perspective of, we want to be able to be SEC compliant. And so what we do, we'll be talking about certain specific deals, certain numbers on deals. We just don't want to cross any lines that we shouldn't from a compliance perspective. So it's very simple to join. It's a matter of going to masterinre.com/join-investors-club. And I'll put that in the thread here. And there it is. And what that does is there are 4 very simple basic questions, and then that'll get you into the investor group or the investment club group. And from there we'll be having these monthly meetings, always a Tuesday, second Tuesday of every month is what the plan is. We're looking at, I'm going to try and keep these meetings to about an hour and a half. What I'd like to do on every one of the meetings is get your feedback, and if you like what you're seeing, share that. If you'd like to get other things added to it, I'd love to hear about that. If there are things that you think are time consuming and not worthwhile, I would certainly like to hear that, because we want to make sure that this is a good value for everybody involved. So and again, the purpose of the meeting is going to be to really be able to network and collaborate and lift each other up to get what everybody really wants, which I think is having their business thrive, having their investments do well, so that they can do, I look at retirement as being able to do what I want, when I want, how I want. And I'm guessing that would fit a lot of people. If anybody has any comments throughout this session, certainly feel free to type them in. I may not be able to catch them all, so if anybody has anything in particular, my suggestion, just a housekeeping thing, is we're going to try to keep it so that people are muted as much as needed if there's any background noise going on. But I really, really do like the idea of having this being interactive and discussion based. And so if I know that there's some way of raising hands on this Zoom platform, I just haven't seen exactly how yet. But what I also like is just being able to raise your hand and wave, and then I'll try to watch and catch whatever. And certainly feel free to jump in if I'm not seeing you. So want it to be very active. Want to be able to be very effective with our time. Like I say,
Tom, just to quickly interrupt here. So for
oh,
everybody on the actual meeting, if you simply go down to the reactions button, and I believe that was somebody who just dropped that in the chat as well. If you pull up in the reactions button, you can see the raise hand option. It's the bar down the bottom. So if at any time you have questions, go ahead and click that, and it'll indicate to Tom that you did.
yeah, thank you, Kyle. And chances are that I may not see that. If I don't, then just unmute yourself and say, "Hey, Tom." So that'll work as well, or just wave frantically, and that might even catch my attention. But I see that there are two screens full of people already, so I'm not going to catch everybody the whole time. So here's a platform, the format that I'd like to follow at, and this is going to be a little bit of trial and error here, or a trial basis. But to give you a real quick rundown, what I want to do is start with haves and wants, and we're going to try this first, just by and what with the Bay Area Private Money for Real Estate Investors Meetup group. I think one of the reasons that was so successful was because we did have that initial, we usually took about 20-25 minutes at the beginning of meetings. Richard, I'm sure you remember those. You've been at a lot of those meetings, and where people can just take 15 to 30 seconds. And I really encourage you not to go much more than that, because I do have a mute button here in case you do. No, really, I want to try and keep it short, so that if we want to be able to say what we have or what we're looking for in a very succinct one-sentence manner, and then be able to give our contact information, or you can put the contact information in the chat. You can say, "Hey, I'm putting my for instance, I'm a wholesaler. I have a project in San Jose, California. I'm going to put my name in the chat. If you want to reach out to me, this is how you can reach me." Something like that keeps it really short, succinct, but it gets you everything that you need. It lets everybody else on the call know what it is that you're aiming for. So that's a haves and wants. Then we're going to take a little bit of time, not a ton of time, but a little bit of time with Alex Arriaga, my business partner, and Chuck Tralka, my business partner. We're going to ask them, and we're going to talk a little bit about current trends in real estate and where we think the market is going. There's a lot of activity happening now, and there's a lot of optimism, a lot of pessimism, and pretty much everything in between. And so we want to get some feedback from some of the professionals here, and have the ability to talk about that for a bit. And then we're going to take two investments that we're currently that are in our pipeline, and talk a little bit about the two investments. One of them is a very green, eco-friendly, really a very feel-good investment. And the other one is a structuring, it's a project where I think that the structuring, and Carolyn, this is one that you're quite familiar with, but it's going to be one where we talk about residential development and doing it in a three-stage process. And then, depending on how we go on time, the last thing in this would be to take, and what I call hot seats, what I like to, and that really is, we're going to look at picking one or two people. Caleb, you're familiar with this. We did this last Friday on our call here. Well, I was in Puerto Rico anyway. It was a one-day workshop that we put on, and it's really, the bottom line question is, where are you at today? Where do you want to be? And what's in the gap for getting you there? And so it may be something where you've got a deal on that came across your desk that you're looking at. You have questions about structuring it, or you can't raise the money, get the money raised for it, or you're looking for something. And within that hot seat, it'll just be a discussion back and forth to help walk you through that process. And then from there, we'll wrap it up. So Anybody have anything they want to share right now before we get into the haves and wants? Otherwise, we'll get going on that. Cool. So, yes, Gary. Gary, you are muted. Let's see if we can figure this out.
Okay.
There we go. Whoop. I think I accidentally hit the button here. So you might want to, there you go. Now you go.
Everybody can mute me? Okay.
Yep.
There's two things I just want to bring up real quick for haves and wants. You know, I'm building, I took over I was very fortunate to take over a luxury home builder's business in San Carlos, you know, in Redwood City right there in Belmont, in a very exclusive area. I had no idea the profits in this thing were anywhere from $300,000 to $800,000 per home. So I'm looking this, in fact, I got a project going right now. It's probably will finish in about a couple months. The profit on that's about 578. So I'm looking for private investors that want passive income, and I'm willing to not only pay interest, also to make them partners in our LLC. I want to scale that business up, take it from about 12 to 15 million up to 20 to 25 million. The other thing, Tom, I'm interested in with you, because you're a heavy syndicator, is that I just came back from Idaho and Boise. Oh my God, they're just going crazy up there. And I was very fortunate to find a banker and a land guy who I'm going to be writing options on projects for what I call affordable housing. One of them is a senior home development. If you're interested in that, I definitely want to bring you projects. Okay. So
Okay.
it's really fertile up there. All right. Thank you.
Sounds good. And if you put your contact information in the thread, then we'll be able to, I of course have your contact information, but one thing that I want to be careful of, I just heard you say that there is this much profit in the deal.
Yeah.
And this is just for everyone, just a reminder that we can never guarantee, we should never say that there's a certain amount of profit. We can say that it's projected to or potentially has, or I know, Alex, sometimes you get a little anxious with me with my waffle words, but I really recommend just under promising, over delivering. And so a project, as you see it, based on the numbers as they look today, it looks like it might have a potential profit of maybe X or something like that. I might be exaggerating a little bit, but just something to keep in mind. So thank you, Gary. I appreciate that. Who else has something that they would like to, that they have to offer, or they would like to ask for from other people? And if you have something, maybe just jump in, because like I say, I only see one. I don't see everyone here. So just, okay.
I'll go ahead. I'm Aram. So I'm a deal syndicator and investor. So I have currently a deal we're funding that's in Houston. We're doing a community of build to rent homes. I'm also, for investors, accredited investors on this one, sorry, if you're not, but accredited investors only on this one. But I'm also looking for deal partners to collaborate on syndications. It's a team sport. So people that want to collaborate on those kinds of things, I'd love to talk to you. And then the last thing is I'm always looking for great deals. I invest, frankly, more than I syndicate. So just because can't do that many. So for those of you that have deals that are looking for LP investments, I'm one of those guys too. So that's me.
Okay, great. Thank you, Aram. And if you put your information in the
I'll do that.
chat, and we can. And you said a build to rent project in Houston.
Yeah, we're building out 146 units in this current one.
Okay.
This is with a known partner that we've been working with, and pretty successful story there, but I won't, get into all the details here, but yes, a build to rent community, horizontal multifamily is another way to think of it.
Okay. Yep. Got it. And we don't have the capacity or the pipeline right now, but if certain things come in place for us, you may want to give me a call and a chat on a project like that. So
yeah, I'll put my info in the thing for everybody. Thank you.
Sounds good. Who else has something they'd like to?
Yeah, Tom, I'd like to share next.
Yes. Hi, Ryan.
Hi, my name is Ryan LaRocca. I'm an investor here in the South Bay area. I currently have two projects going on in San Jose. One's up in the Piedmont Hills area, and we just put another one on the market in Willow Glen. I'm out there finding tons of deals right now, and I'm looking for capital partners that would be interested in partnering up in things that come down the pipeline.
Okay.
I only have so much cash to invest in some of these projects. So yeah, look for partners.
Good. Sounds good. We'll look for your information in the chat.
Yep.
Thank you for sharing, Ryan. And who else has something? Anyone?
Tom, I'm just going to articulate, Kim put in the chat that she's looking or interested in affordable housing and senior project as well. So Kim, I don't know if you want to share or if that is just enough. That's great too.
Cool. Thank you, Kyle. Cool. And I see, I also see Kim Wirt. Hi, Kim.
Hi. The first guy that when I was just letting him know that I was definitely interested in what he was talking about in Idaho.
Great, great. Good. Who else has something to share that they have or something that they are looking for? All right, Kim.
Yeah, hi, Tom.
Hey,
everybody. Yeah.
And Richard, I think I see Richard on the side there. Is that right?
You see his nose, that's it.
Good, good. Good to see you guys.
Right. I have a fourplex that's listed over here in the Capitola area. And I'm looking to 1031 that property into a property out of state.
Okay.
I'm collaborating with somebody. It's fairly equity heavy. So
Okay.
mind splitting it up and doing, maybe a multiple.
Okay. And numbers look pretty good on it?
The numbers are looking fabulous on it and better than expected. Great,
great. And yeah, if you put your information in there, we obviously have it, but for the group, pretty good. Who else do we have? Anyone else looking to share? I don't see any hands waving, but. All right. Well, that was quick. That was easy. Let's next time when we come to the table, if you guys think of something that you want to share. The other thing, like Kim, the other Kim had put in, just feel free to put it in the chat, and that's a good way to do it if you'd rather not talk. So good. Well, with that, I am going to go to the next stage here, and that is, or the next item of business, and that is to talk a little bit about the current trends and where we see things going. And with me tonight, I have asked Alex Arriaga and Chuck Trelka, my two business partners, to give feedback on where they think the economy is going, where they think the market might be, what do they see? And I'm going to leave it as a pretty broad question, so that Alex, if you don't mind going first and just sharing with us what you see as opportunities, what you see the market doing, what kind of a very broad stroke of what you think would be valuable for all the people on this call based on what you're seeing in your opinion.
Hey, Tom. Hey, everybody. Happy to be here, and I see some familiar faces. And yeah, it's a pretty broad question in terms of some of you may be in the real estate industry, some of you may not be in the real estate industry. So I'll just focus on the real estate industry, but there are also other asset classes that, during the pandemic, one of the things that we've seen is that they have gone mostly mainstream. So the product of Airbnb continues to be mainstream, so that you guys know, with a lot of desire of moving out of the hotel structure for vacationing. What we're seeing is that the hotel structure is more for business travelers, and vacation and travelers are choosing Airbnb. So some of you that are in the Airbnb industry, you're probably already experiencing the effects in the last 12, well, I would say 10 months, you probably are seeing higher amounts of incomes. But just, take in consideration some other type of real estate asset class that will hedge against when, a lot of the wave right now that is traveling starts to taper down. And you're probably already starting to seeing that because of people returning to school, depending on what state you live in. So that's one trend that's still strong. It's still pretty popular. Now, here's the one that 2 weeks ago, I was presenting in front of a, does anybody have any investments in crypto? And I'm not going to talk about crypto. I'm just going to say that I was in front of a group of crypto and they were asking real estate questions. The one of the things that is happening, and I think it's sort of been announced, it's a reopening for different countries of that United States have sort of closed their doors to. One of them being China has been one of them. And so one of the things that we're seeing is it's a high interest and again, Chinese investors, Chinese purchasers buying real estate assets. One of the things that happened during the pandemic and a couple of years before, a lot of regulation came down on investors in China buying multiple properties. And what they did basically, one of the things that they did to taper their office, if you're buying property that's not the one that you live, your taxes are exponentially higher. So historically, the Asian investor loves new construction. And I'm going to repeat that again, loves new construction. And what we're expecting to see in the coming months is as we start opening our borders, there are certain restrictions, but as we start opening our borders, there's a strong interest for them to start buying assets in the United States again. So if you're in the new construction, I think, yeah, there you go.
Yeah. All new construction.
I forgot. I see your G Masari. What was your first name?
Gary.
Gary, you're in a business that it definitely has people looking into it for them to basically hedge against whatever political situations and monetary situations that happen everywhere. So I'm just going to leave it just to keep it short. What we've seen, Airbnb has a strong interest hedge with something else within real estate in order to, when you see the impacts of maybe not having the same strong numbers of Airbnb in the first part of the year, but still strong in new construction from international investors. It's what we expect to see.
Cool. Thank you, Alex. Thank you for sharing that. And I didn't do a real good job of introducing Alex. Alex is my business partner in Kensington Fund, and we have an office here in Puerto Rico, and we have offices in San Jose or Campbell, California as well. And one of the questions that Alex and I have been bouncing around, this idea of doing a one day or kind of a fun day in Napa Valley, and just to talk about new construction. We've got two projects going on up there. One is ICF construction project, and the other one is just a new project in Napa. And if anybody, I'm just thinking this off the top of my head here, but if anybody on the call would be interested and would like to see something like that, like a one-day sort of a new construction training session and being able to tour a couple of homes and really talk about what's available, what's going on up there, and maybe even share a glass of wine or two. If anybody's interested in that, just pop that in the chat. I think that'd be a lot of fun to do something like that the next 30 or 60 days. So again, a side note that I just thought of now that we're talking. So Alex, did you have anything to share to add to that, or I see your
yeah, it was just good things. I mean, they were so premature. We were just talking about maybe yesterday, the day before. We thought about Tom and I go quite a bit up there to oversee the projects, and we enjoy it a lot because, I don't know, Napa is nice, and then we can have a glass of wine. And so we thought, maybe people want to see what is it to build this type of construction, this type of homes, especially if you live in California. California and again, I'm including myself because I spent a lot of time, and before the pandemic, I was spending probably almost all the time over there. But middle class in America is having a challenge. And if you went to, somebody said went to Idaho recently, and they were looking how things are happening over there. So the numbers are totally different from where they were prior to 2008. So there's different things, and one of the things that, and I think most of you are from the Bay Area, right? Or a lot of you are from the Bay Area. You guys have certain sort of bubble, which is called technology, and then you have all this young generation depending on it, like the life depends on it. So you guys have all those incomes and economics that do work. So you guys live in a pretty much a blessed area for fluctuations.
Oh,
Yep. And one other thing, we won't talk about it tonight, but at some point I'd love to have you on to talk about cryptocurrency and real estate combination. We've been seeing a lot of interesting things going on here in Puerto Rico. There's some sort of a connection there that those two are really going to be, if they're matched up properly, they can be very powerful, I believe. So thank you, Alex. Really appreciate you taking the time to share. So, and now Chuck Trolka. Chuck is my business partner in GCA Equity Partners. And I would like for you, Chuck, if you're open to this, to share with us, what do you think is what are we in for the next 6 months, 12 months, 18 months, however long you want to go?
Username password.
¿Cómo? Pardon me? Oh, so somebody else must have been talking offline. So go ahead, Chuck. If you can just give your state of the union address.
Sure. Yeah. So we've been working on projects mostly in the greater Sacramento area recently, and we've been building single-family residential units. We're just wrapping up a small subdivision project there, and we've got several more in the pipeline, as well as some multifamily projects. And I think there are a couple of things going on. One is we've all seen the really high price appreciation that real estate has experienced over the last few years. And what we were building right when the pandemic hit, and what we saw was a couple of months where it felt like everything stopped, and everybody sort of took a deep breath and then went forward again. And house prices kind of paused and then just started going back up again. So I think in the short term, we're going to continue to see that. We've got a low interest rate environment. We've got very strong demand from people who are looking for housing. And that combination has pushed up prices. So, and at least in the Sacramento area, and I think in many other parts of the US, we have a market that has been underbuilt because a lot of construction stopped during the bust of 2008. And so in the short term, I think things look pretty strong. We probably won't see the kind of price appreciation that we've had, just because I don't think it's sustainable for the long term. Ultimately, interest rates will start to move up again, and it's difficult to say exactly when that's going to happen, but that will start to put some pressure on house prices when it happens. And I think everybody's got to watch the supply-demand situation market by market, and ensure that whatever market you're investing in doesn't get overbuilt, because now some economists are starting to highlight certain areas that they think people should be careful about. And of course, prices have already gone up a lot. So if you combine higher prices with higher interest rates and a lot of new construction, then there is the potential for either a slowing of appreciation or possibly even a reversal at some point. I don't see it happening in the near term, but it will happen, and people should be ready for that. the other big trend I think that we're seeing is in multifamily construction, and where again there's seems to be a large pent up demand. And also, I know somebody earlier mentioned a build for rent model, and that's something that we're also looking at for some of our sort of medium range, medium price range single family product. So I think those will be trends to watch over the next year or two.
Cool. Thank you. Thank you, Chuck, for sharing that. And just for the record, Chuck was one of the people who, and you can correct me if I'm wrong, Chuck, or if I'm overstating it, but you more or less foresaw the 2008, 7, 8, 9 situation coming, and you exited a number of your properties right before that, before the downturn, and were able to get back in again in 2011.
Yeah, including I even sold my own house prior to that,
Yeah.
and rented for a while, and started buying back in around well, started around 2010, and then have acquired some other properties since then.
Yeah.
So so I do think we're getting fairly late in the current cycle, but I do still think we've got some room to run here.
And as far as any sort of a massive meltdown like it was the first time around, even though we had COVID and we have a lot of things going on with commercial real estate, everything, all of that going on, my sense is that I don't see it being as extreme, but
That's right. Yeah, I don't either. I think the conditions that we have right now, you know, ultimately there will be a slowing, and in some areas potentially a reversal. But I agree. I don't think it'll be anything like we saw in 2008. The dynamics are quite different this time.
Yeah. And one of the strategies that we've always worked towards is trying to find the short, a little bit shorter term. Now, some of the projects that we've been in have gone longer than planned sometimes, but generally speaking, if you can get into shorter term projects that are not that aren't susceptible to well, if you can go into shorter term projects, you can adjust your strategies quicker when you're not caught into something super long term. So
Yep.
that might be something to think about.
Yep. And one other thing too, I'd just like to comment, sort of add to Alex's comment. We've also seen, we're not directly doing Airbnb type properties, but we're well connected with some people who are, and what we've seen matches what Alex is talking about, that there seems to be a really high demand. People want to travel, and they know that being in their own sort of home environment is safer than being in a a large hotel with a narrow corridors and a lot of people. And that I think a little bit later, Arthur's going to talk about a project that fits that model almost perfectly. And in fact, I think Arthur has seen similar things from some of his own rental properties. So we'll talk about that, I think, a little bit later on in this session.
Great, great. Well, thank you. Anyone have any questions for Alex or for Chuck as it relates to the market? And just unmute yourself and holler if you have any questions or any comments that you'd like to add. Anyone?
Hey Chuck, you were talking about the real estate market slowing down. Are you kind of focused? I know you guys are focused in California, and I definitely see there's definitely issues in coastal, larger markets. Are you thinking this is going to be a larger event, or more focused on your markets that you guys are?
No, and actually not even specifically where we're working, at least at the moment. We're in Sacramento, and so we've been watching that market fairly closely. And it still feels underbuilt to us. And so we'll continue to monitor that. But I do think, I think anybody who's investing in a particular area should understand the dynamics of that area. And I do believe that the dynamics are going to be different from location to location. Though there will be some macro trends. And I think in particular, we all need to watch what's happening with interest rates. But I think the bigger driver is going to be whether or not a local market is overbuilt or supply is starting to outstrip demand. So that's what I would be on the lookout for.
Thank you for the question, Matt, and thank you, Chuck, for the answer. Yes, Dave.
Hi, Tom. I live in Puerto Rico, and I've actually been living in Puerto Rico for about 7 years. I moved from San Diego.
Okay.
I lived in San Diego for 23 years, and of course, none of us who live in San Diego want to move, but unfortunately, it's in this state you may have heard of called California. And so it really forced me to have to move to Puerto Rico to really kind of win the money game. And it's been a great move for a lot of different reasons. And we invest in real estate, and we invest in private lending, and we invest in early stage venture companies, including crypto, where we've done really well. Well, I give you that context because there is some sort of coalescing that's going to be going on in the near future relative to real estate and crypto. And I'm not the brightest guy on the planet when it comes to trying to share, but my son and his roommate created something called Flow, which is now done $700 million in the last 7 months. And it's really a big deal. Anyway, I share that because with respect to real estate and private lending, I've been doing something called the State of the Union for real estate investors since 2005 when I presented first at Harvard. And it may be beneficial for folks to tune in. And I mean, that's not why I got on this call. I was trying to kind of be a part of, or at least understand what you were doing and be a part of it. But I'll put the link, and if anyone wants to register, they can. There's nothing for sale. It's just the same annual presentation that I've been doing for 16 years on where the market's going. And it may be helpful to folks. And if not, no need to register.
Yeah. Wow. Well, thank you. I really appreciate you taking the time to step up and share that with us. Curious, where in Puerto Rico are you?
I live in Condado.
Okay. Got it. I'm just up the hill. I'm in Santurce.
Okay. Yeah. I live on the ocean in Condado. We have a family office here. So one of my sons lives here, and the other one moved from the Bay Area, where it sounds like a lot of you folks are, down to Rancho Santa Fe in San Diego. But one of my sons lives here in Condado, and I live here in Condado, and we're winning the money game by not giving it all away.
All right. Sounds good. Well, we'll have to grab a cup of coffee sometime here. So.
Yeah, Dave, I hear you, man. I used to live in Little Italy in San Diego. I totally hear what you're saying.
Yeah.
So love to grab some coffee with you sometime.
All right, good. Well, thank you for sharing. And if there's nothing else on those topics, let me just check for a raise of hands. Anybody waving their hand or? Okay.
Jackie had asked in the chat here. She just said, how is the current real estate market in Puerto Rico? Will it have a correction coming up as well?
Alex, I think you'd be a good one to answer that one, if you don't mind, just because you've got your broker's license and everything and your finger on the pulse.
Are we talking about the residential market, or are we talking about the commercial market? Or are you talking about the market as at all?
Jackie, if you can just put into the chat confirmation on that, that would be helpful.
So I'll residential.
Residential.
Jackie, let's see if I can pinpoint where Jackie is over here. Okay, I see your name over there. So we're under supply right now. One of the things, just like what Chuck was saying, and there was a point that the developers were not around, that like sort of like they were gone. And the next thing you know, it's right now we're in an undersupply. Our properties last year appreciated 14.5%. That was during 2020. So we've had a pretty aggressive appreciation. But at the same time, we're still very affordable. I mean, we're still completely affordable. One of the things that is also adding into the pressures of real estate here for the developer investor, I mean, it is I would say it's a pretty cool time, at least over here. There's some tax preferential treatment laws that you may have not heard, like someone over here said, let's all go to Puerto Rico, which is cool. I mean, it's an island, but there's some tax preferential treatments that keeps bringing entrepreneurs in the island, and the demand of housing that it's creating. Definitely, it's something that a lot of us that have come earlier are fulfilling, and the ones that are coming, I guess they're going to fulfill for the next one. So there's a very healthy market when it comes to real estate. Again, appreciations last years on the residential market were about 14% over here. When you take in consideration, depending on if you become a resident, if you solicit a certain amount of what's called tax preferential decrease, there are exemptions for investors on real estate gains when your first couple years as you move here. So imagine doing a couple projects and then you have no tax consequence. Just like we were sharing a second ago about winning the money game and why coming over here have made more sense in the island. So yeah, that's basically the outlay in residential. Now the other part of it is, like, some of you guys may ask the question, the residential, you know, where's, I mean, some of you may say, where's Puerto Rico? Is Puerto Rico part of the United States? Just to give a brief so everybody is on the same page. Puerto Rico, it is part of the United States. We are one of the territories of the United States. Everything is the same. It's exactly the same structure, governmental structure, federal, state, same laws. The only difference is taxes. You know, how do we pay taxes over here? We don't have a federal responsibility when it comes to taxes. We do have a local responsibility. So just take that in consideration. And when it comes to construction, if you're in construction, have this conversation about how many moving parts are in construction when it comes to plumbing, framing, you know, sheet rocking, you know, roofing. Over here is a lot more simple. We built in reinforced concrete, which is pretty much straightforward. So construction time sometimes can be less complicated. Actually, a lot of the time it's less complicated. And properties maintenance it's a lot lower. Paint, it's what's the highest maintenance, because living in an island, you know, you'll be painting your properties every probably 2 to 3 years, and if you want to keep a good quality. But other than that, it's pretty simple. A lot of the newcomers this year, I've been amazed of how many people continue to come over here. I think it's the conversation of taxes in the upper 50s. I would call it the upper 50s. When the pressure goes higher into the tax, I guess into the tax conversation, the more we keep having to come down here. So yeah, it's a pretty healthy market, a very collaborative market, so that you know. I guess cultural wise, we're very collaborative. And I see a lot of locals collaborating with the newcomers. So if that's the way you operate, you'll definitely succeed over here. Thank you for the question.
So I'll just add my 2 cents on that. One of the things that I think that I like Puerto Rico for the best from an investment perspective is what I call an inefficient market, or what's called an inefficient market. And a very quick shameless plug for my book. I talk about it in my book. About how an inefficient market can mean, if you're really in the know of what's going on and really understand, like, microcosms or microclimates within the market or micro areas, you can find some really amazing deals where, and it doesn't mean you have to rip somebody off to get them. It's the situation at hand that allows for that sort of a ability to get deals that you otherwise wouldn't find. And by inefficient, it just means, an efficient market means that everybody has a lot of information and a lot of the same information. Right now, I don't know if you'd really necessarily call it an efficient market with renovations and rehabs, but in the States right now, renovation and rehab properties in the hot markets is something that I personally would stay away from, because there's way too much money chasing it, because there's too many people going after those few properties that are there. And so that squeezes the margins. Whereas something like here in Puerto Rico, there are some really good hotspots, but the efficiency of getting the information around to everyone that's equal, it's really hard to do that. So I don't know if I made sense on that, Alex, or not, but I do think that is an opportunity area for people who I know that there are some really good deals to be had.
Yeah, the part of, just so that everybody can comprehend in a comparison way. Can you imagine having California without a centralized multiple listing service database? Yeah. Right. Can you imagine California without an MLS? I mean, it would be how many relationships you have with people. So we do not have a centralized MLS. We do have, realtors over here can input in the MLS, but the MLS that it goes to covers Central and Southern Florida. That's where it comes. Over here, each brokerage house has their own database. So here's about connection. Like, this is real estate goes back to the people here. And that's what Tom talks about. It becomes really inefficient. So if you're sitting down, just clicking on the computer from California, wanting to buy some real estate over here, what you may end up buying is basically at the retail level. That's you buying as a consumer, which, hey, it's okay if you buying something for yourself and you really want to enjoy it. I would say, if you're married, guys, you probably know what I'm saying. That if you did that first thing of like, hey, honey, let's buy our first house and rehab it because we'll make money. You may either have some difficulties or may not be married right now, but the inefficiency of the markets, that's what Tom is referring. And I'm just giving you one of the examples of inefficiency over here. And the other one is capitalization inefficiencies. So if you're relying a lot in the institutional capital, then you will have, and then probably you have experienced that in some states in the upper 50s. But it takes a little longer right now through an institutional bank for you to get money. So if you're a good syndicator, or if you got plenty of liquidity, you'll be doing like super awesome. Some examples of buy and hold or properties, and again, this is what's potentially I have seen. So I'm SEC compliant because I'm a syndicator as well. But a couple of examples of what I'm seeing of properties that are online in the buy and hold. You can still find double-digit returns on cap rates in a not a C-class location. You're not going with a gun down to go grab your rents. So it's just the inefficiency of the market, and we're bilingual, so that you guys know. I was with some people recently, Robbie. They came 4 years ago. They say, no way, Jose. I thought that my 2010, 11. That's when we could just buy anything we wanted to buy, and it was going to go up no matter what. He thought that he would never see that again in his life. He came from California. In the last 4 years, he's accumulated about 800 units, and he's producing in long-term rent. And now he's hungry with Airbnb, producing double-digit returns. So yeah, it's still a market. I mean, again, in a fragmentalized, in an efficient market, if you're a solo gig, it might not be the right formula. Collaborative formula here, you'll do really well.
Great. Thank you for sharing, Alex. Appreciate that. And Bob, welcome. Glad you could make it here. So glad you were able to get in. let's see. So with that, what we're going to do, we're going to shift now. Unless we had anybody have anything they wanted to add, I'm going to just check for hand waving if anyone.
I know Sylvia had her hand raised. I don't know if it went
Oh.
away, so I don't know if that question is still on the table.
Okay,
Yeah,
now
I'm
Mark.
sorry. I'm
Oh,
sorry,
Sylvia,
my
go ahead.
reception is not that great, so I didn't hear what Chuck or maybe Tom was saying about the California market going down, or something. When would that be? My
Oh, yeah,
reception's bad, so I missed it.
this is Chuck. Yeah, I didn't say necessarily that the California market will go down. I think it's difficult for anybody to predict what'll happen too far into the future. But what I did say was everybody who's investing should understand the dynamics of the local area. There's an old saying that all real estate is local. And there will be some macro trends like interest rates going up that we all have to watch. But in general, it's important to note the supply demand situation for each region. And where, for example, we're in Sacramento. I saw Arthur just sent a little note saying that he had read that the Sacramento market continues to be underbuilt by quite a few units. And we believe that to be the case as well. So there would be an example of an area that we're comfortable continuing to invest in. But I'm just saying for everybody, make sure you understand the local dynamics, and rising interest rates at some point will put pressure on the local markets. So that's all.
Cool. Thank you, Chuck. Appreciate that. And then Mark, you had your hand up before, so good to see you.
Thank you. Let me unmute. Just want to add to some of the dynamics I'm seeing here in the Bay Area. Little background, been a real estate broker, investor since 2008. Also early member of the GCA fund since 2014. Thank you, Tom and Chuck, for managing my retirement money. But what I want to add to this dynamic is I've been working for Home Depot as sales manager, outside sales. I get to see real rehabs. I get to see the millennials buying the $2.4 million fixer-upper and spending another $120K to get it to market. And they're living in Alum Rock. No, hopefully no one lives in Alum Rock, but you get my point. And then also what I see is a lot of the baby boomers. I would suggest a lot of the folks here on this call that really can't afford to sell their house because it costs $2 million now. They're sitting, I call it equity rich, sitting on $1 million worth of equity. They paid off their house when they retired from HP or IBM, wherever, but they're cash flow poor. I go to their house, they have all prescription medications on the kitchen. All they complain about, insurance doesn't cover anything. It's kind of sad, but folks like that, the choices are you move out and you can't come back. The door kind of slams behind you. And, so I'm seeing a change of money, if you will, from, the baby boomers retiring, looking at Phoenix, looking at Dallas, looking at Portland, getting out of California. I think someone echoed that earlier. To, the tech money, the folks that work for Facebook, Google have, can pluck down, 200, 400K deposit and then have more money to go ahead and fix it up. It's a little scary, I think, because their needs are much different. Most of the cash-rich millennials want to live in the condo with the Starbucks on the first floor until they have their first kid. Then they want that single-family house. But I tend to agree that it's probably not going to change as long as there's tech money feeding it. Despite the rumors of Tesla moving out, this and that, there's a huge middle-sized companies are going to fill that void very quickly, and the cash is still flowing. I see it every day. Because I wouldn't pay $2.4 million for a 1958 house with 2 bedrooms and 1,600 square foot, but someone will.
Yeah.
Just want to add my piece to the team. What I'm seeing here, still field soldier in real estate.
Yeah. Thank you, Mark. That's really helpful. I appreciate you sharing that. Very insightful. Good. All right, well, let's, unless we had someone else here with a question, I don't see any hands up, any waving. So we're going to move on to our next area, and that is to talk a little bit about do good, feel good, environmentally sound. There's all kinds of different terminology for this, for what Arthur Zorn is going to be talking about. Arthur, would you mind just, if we can start out, just share a little bit, just briefly, your background and how you got into the sort of the realm of business as it relates to real estate that you did, because you've got a really neat, cool project going on in Costa Rica.
Absolutely, I'm happy to share. My background, I began as an applied physicist and then earned a Harvard MBA, and I spent most of my career pushing the limits of technology in Silicon Valley, doing high-tech startups, fields including virtual reality, semiconductor equipment, drone navigation, and a whole bunch of others. And so my career was basically about looking out 30 years in the future and figuring out what would be big then, and then trying to build the first ones. And that was always exciting to me intellectually and relatively rewarding, and kind of what drives a lot of Silicon Valley. So I also did real estate on the side. Starting in the late 80s, I bought my first house and then bought the one next to it when it was in probate at a good price, and kept on going from there. Ended up doing 100+ unit multifamily and DFW resort properties in Park City, Utah, and then some projects in Costa Rica. So my main project in Costa Rica that I think Tom wants to talk about is Turtles First. And it's really looking out 30 years. What I'm trying to do is create a tourism experience that would be like the year 2050 if we actually do save the planet. And so imagine tourism development where every last detail is extensively vetted to be net zero or better everything: carbon, energy, waste, water, food additives, no fossil fuels, no chemicals, no nothing. Like everything is completely natural, but at the same time, it's super high-end luxury. So part of the goal is to create an experience where guests are in a beautiful natural beachfront setting. They're having the ultimate luxury experience, and their body is healing and regenerating along with the planet. So it's really about people and the planet regenerating together, and the guests understanding the underlying science and engineering that it takes to do that. And really it's about showing that luxury and planet friendliness are not mutually exclusive, and that doing true green development, not just greenwashing, but true green, push the limits green, is actually more profitable than just doing things the same dirty, old-fashioned way. And I can give you an example of that because I have a really nice Airbnb sort of beachfront villa nearby this project. We put solar panels on the roof. We put 80 solar panels on the roof a few years ago, and the payback was less than 5 years. So if you think about your typical real estate investment where you're looking at much longer payback timeframes than that, you can look at a lot of sustainable engineering as accelerating the payback and the cash flow on your deal. And so it's a way to make more money rather than less. And at the end of the day, I also want to feel good. I'm in my early 60s. I've had a great career and I've got 2 kids in college. And I worry that the world they're getting is kind of a mess and we need to start fixing it. And so creating a prototype for the year 2050 in tourism is my way of creating a path to introduce a lot of people to the fact that we really can do it right. And you don't have to give up anything to do it. You actually gain from it. So that's kind of my vision for the project. It's
so
built.
Can you see the screen share that I did here?
Yeah, I see it, and I see an aerial view of a rendering of our villas.
Yep.
The accommodations are very unique. We actually came up with this before COVID, but it's perfect for COVID. Each villa is like 8,000 square feet. It's a beautiful, luxurious villa with a beautiful living area. And then the bedrooms are in separate little buildings accessed by outdoor hallways. And each bedroom is a luxury suite. So at the end of the day, you can rent a private villa on Airbnb and have complete privacy and safety and so forth, but still have resort amenities, or you can rent an individual suite. And when you rent an individual suite, you still have an outdoor experience where you're not going through indoor hallways or anything like that. I see a beach club rendering there. The beach club is also similarly outdoors. Everything's outdoors, the restaurant kiosks, the bars. It's sort of outdoor living at its finest right by the beach. And when COVID happened and I went through and started looking at our design and saying, what do I need to change for COVID? We literally could not come up with anything. Like, it was already designed for COVID before COVID happened. And so I'm really happy that it's sort of a forward-thinking, forward-looking approach to tourism that fits Costa Rica perfectly and fits a lot of tourism trends perfectly. The trends being ecotourism, wellness tourism, and luxury tourism are all going crazy right now. And we're sort of at the apex where they all meet. I guess I'll also mention that Costa Rica is the ultimate inefficient market, much like the way Alex was describing Puerto Rico. There's no multiple listing service. We're buying land for this project in the $2 a square foot range. And the sort of consumer price, if you're a gringo just showing up there to buy a lot to build a house, is going to be like 5 times that to much higher than that. So we're able to buy at a very, very good price because we have relationships and we know people, and we're not just looking at what the realtors might put on their website. We're actually talking to individual landowners who have no idea what their land's worth because there's no MLS or other market making mechanism for them to know. So that's kind of an overview. Did I hit the points you had in mind, Tom?
Yeah, I think so. The pods, or what are you calling them, pods?
Well, these are villas. They're standalone villas that you can rent as a private villa, or you can rent an individual suite in one. So once we rent a suite in one villa, the rest of that villa's suites are available to rent as suites. But the key value there is that we can take the same inventory and offer it for rent as a villa on Airbnb and TripAdvisor and all the other sort of rent a villa sites that consumers use. But at the same time, the same exact suites in that same villa are being marketed on hotels.com as a luxury suite in a resort. So same inventory, 2 different marketing channels at the same time. And we think that's a unique competitive advantage that no one else has down there, and maybe not anywhere, I don't know.
Got it. How about, I know one of the questions that we get sometimes, and I know how I share it, but could you share the answer to investing outside of the US, investing in Costa Rica? We have quite a number of investors that have invested with this. And by the way, I think there are a few spots open on this. If anybody is interested, you can reach out to me and let me know. But that being said, what's your answer to the safety of the investment from the international investment perspective?
Well, there's several levels to it. And so I liken going to Costa Rica to the first time I went from California and invested in Texas. And I found out that a lot of things work differently in Texas than they do in California, but fundamentally real estate still kind of works the same there. And it's like that in Costa Rica. It's a stable democracy with 3 branches of government. It's safe physically and financially. Property and lender rights are respected. It actually has a higher literacy rate nationally than the US, longer lifespans, higher happiness rating, and a better healthcare system. No military, and there's no big internal unrest. So it actually feels like there's less fear and risk there in a lot of ways than the US right now, because we're kind of a mess, guys. Like it's a little scary here. So there's no currency controls, but there's a lot of know your customer requirements when you bring money in. So it's actually easier to get money out than to bring it in, because Costa Rica is a real close ally to the US. So they follow all the anti-terrorism and money laundering laws. And nearly all of the investment in Costa Rica comes from US investors. So they have no temptation to mess with us. So it's a good place to get a good short-term yield, to diversify a little from any issues that could hit the US. In the case of my project, it's a way to feel like you did something good for the planet while making money.
Great, great. Chuck or Alex, do either of you have anything you want to share on this? I know Kensington and GCA are both have investors involved in this project. So Chuck, do you have anything to share?
Just getting my phone off of mute or my microphone. No, we really like this project. In addition to all of the green aspects that Arthur talked about, and the fact that he's got it sort of almost pre-configured for what people are looking for these days in terms of having independent units. Both of those things are, I think, really highly desirable. But we also, I personally really like the model of the lower operating costs that you would have with this type of property compared to in a country like the US or someplace in Europe. So you combine the kind of room rates you can get in the US or Europe with the operating costs of a place like Costa Rica. And it really makes the numbers look good on this type of a project.
Good, good.
Yeah, I should also mention that the international airport an hour from us is now setting all-time records for international arrivals. Like the demand has come back with a vengeance. Rents have gone way up, nightly rents as well as monthly rents for longer term renters. Housing prices are going through the roof down there because so many Americans want to move there, and it consistently gets rated the #1 retirement destination in the world. So there's a lot to like down there. There's not really much to not like, I guess, is what I found.
Cool, cool. Thank you. Thank you, Arthur. Julie writes, fabulous, Arthur and GCA. Matt writes, also Playa Grande has a world-class surf break. We spent New Year's there last year. And Kim and Rich, please send us investment summary. And Jackie, what is the average occupancy rate in this Villas de Tortuga? So that's when
it's not built yet, so the average occupancy right now is 0. We've budgeted to achieve the similar average occupancy for the area in general before COVID, which was about 60% over the course of a year. We think we ought to be able to do a lot better than that because of some of the competitive advantages we have, like the flexible inventory. And I can tell you that higher end rental villas now are at much better than 60% looking out over the next 12 months. It's like really like scary, thrilling to see the nightly rates we're getting now looking forward, and also having so many nights booked over the next year. We're not used to that, like probably 50% more nights pre-booked over the next year than we're used to seeing.
Good.
So,
all right.
Very
good. Any other comments, questions on that project?
Julie, yes, you're welcome to visit in Costa Rica on your way out of Puerto Rico.
That's a great plan. Okay. Good. So thank you.
It looked like Tom, it looked like there was a question from, I think it's Gary.
Gary, yeah.
Oh, Gary, yes.
Yeah, just a couple of them, and then maybe you can send me the details. You guys got me excited about Puerto Rico. I think, are you guys, is this development basically for cash flowing in your syndication, or do you have an exit strategy to, increase the cap rates and then sell it later on? What's the end strategy for you guys?
So this particular one, just to be clear, is in Costa Rica, not Puerto Rico. So
Costa Rica, okay, go on.
Yep, but go ahead, Arthur, if you want to answer that, or Chuck.
Thank you for clearing that.
A lot of people do confuse the two. Costa Rica is a small country with about 5 million people in Central America. It's very close to the US, so much quicker to get to than Hawaii for most of the country, and about the same distance as Hawaii out of LAX if you take a nonstop, just to give you a sense of where. In terms of exit, This is a build to run and stabilize, and then we expect to sell it to a hotel chain. But you know, in the short run, we are rolling it into a portfolio that Chuck or Tom could probably talk more about for funding the full construction. So right now we're in the what I would call pre-development stage. We're acquiring the land, doing the entitlements of permitting, doing the design, and a lot of extensive engineering that it takes to actually walk the walk that we're talking about. You know, net zero energy, zero water, zero waste. There's a lot of engineering that goes into that up front. And for those of you who are engineers, you'll get this, but a lot of times if you put more work into something up front, you get the payback all down the line later because you did it right. You didn't just do it faster the conventional way. So it's really a engineering intensive, and you can think of it as high technology meets permaculture biology, if you will.
Okay, one more question, Tom. I'm really interested in what you guys are doing. Is there room for a person like me who's a developer, builder to go down there and work with you guys on developing and building these projects? That's the love I like.
Well, it depends on whether, again, I think Costa Rica, this is more or less a one-off project that we have going in Costa Rica. In Puerto Rico, I think there's having an office here in Puerto Rico, that may be more viable.
That's what I'm really interested in Puerto Rico, to be honest with you.
Yeah, just so you know though, Gary, Alex brought up an interesting point, which is the construction techniques tend to be very different in different places. So the way you're used to constructing projects in the US, like not going to happen in Puerto Rico or Costa Rica.
Are you using the cement structure?
Yeah.
We're the conventional approach in Costa Rica is the reinforced concrete, just like Puerto Rico, because we have big earthquakes. We're not going to do that because concrete is one of the nastiest nastiest building products in the world for the environment and otherwise. So we have some different approaches that are a little more forward-looking than that.
All right, I'd have to learn that. There's a lot I have to learn, Tom, if you have the time.
Yeah.
Okay.
Yeah.
Yeah, Tom, you can tell them that you just went to a Earthship home over here.
Yeah.
We're starting to build Earthship homes here.
Yeah, that was an interesting one here in Puerto Rico. So pretty unique technology. Used tires and bottles and
yeah. Well, we're not going to do that. We're going to be a little classier than that.
Right. Yeah, this is the opposite end of the spectrum. But
forward looking. I'm really impressed. Very forward looking.
Yeah, cool. So
well, you know, I look for ways to make money and solve problems at the same time. And I would just love to invite you all to think like that, because it is possible and it is doable, and you end up going to sleep at night feeling better because you did something important, not just something profitable. And you know, at my age, there's not a lot left. I've already raised my kids and whatever. So now well, what can I do that's gonna live on in a good way, that's more than just another concrete building that makes me money and makes you money and whatever.
Good. Thank you for sharing, Arthur. So the next one, we're going to go through one more project here, and while I'm pulling that up, Chuck, do you mind just talking a little bit about this one? This is let me get to the right one and move this around. And so this one's called Hedge. It's in Sacramento, and there's a reason that I wanted to talk about it, but Chuck, if you can explain it first.
Yep. Yeah, so I mentioned that we're just wrapping up a project in Sacramento called Portofino, 26 single-family homes. We've got a couple more projects teed up. One's called Hedge, and we have another one called Ballinger. These are also small subdivisions, but aimed more, whereas Portofino was more entry-level housing. These are more mid to mid-high homes, expected to sell in roughly the $600,000 to $700,000 range. And in both cases, Hedge, we'll focus on Hedge. It's we've acquired the land and we're in the process of developing it. We'll be final mapping it. So in Sacramento, the stages are raw land, then a tentative map, then a final map, then horizontal development, and then vertical construction. And so this property right now is in the tentative map phase and soon will be final mapped and with approved improvement plans, which basically means we'll have permission from the county to begin the actual horizontal development work on the project. And we already own the property. We've already spent time on entitlements. We're in the bonding process right now. We've got our improvement plans are just about in place. And we're aiming to start the horizontal development work early this coming year. So that's a quick overview. There's one other thing. This will be, there are actually 34 lots total. We're doing it in 2 phases. The first phase is 22 lots. And then the second phase will be 12 additional lots. And that's because the entitlement is also happening in phases. Good,
good, thank you. So the reason that I wanted to bring this one up in particular now was what we do when we look at these projects is we want to, and I think of this because last Friday when we were doing our the one-day masterclass that I put on, we were talking about this, and I know that there are a couple of developers on the call now, and I'd love to get your feedback on it too. But the way I look at it, it's almost like stacking 3 strategies. The first strategy is to take raw land and get it to entitlement stage. And that really just means that it has all the approvals from the municipality or the county to allow it to be split into certain number of lots that then, assuming that certain work is done to the property, then the lots can be built on. And so I think we've got 3 or 4 investors on this call right now that are invested in this project or very similar ones to this. But it's what we like to do is set it up so that there's 3 stages. One is the entitlement stage that takes it from raw land to entitlements. And then the second stage is to take it through the horizontal construction and basically permit ready lots. So that's the end of the second phase or stage. And then the third is to go vertical. And the reason we do that is that we want to be sure that at any point in time, especially now, like with the economies, not knowing exactly where things are going, it's always good to know that there's an exit strategy at certain points. And so this one is, as Chuck mentioned, it's set up so we're taking it through the entitlement stages now. So the investors that are in it now will be able to stay in until the end of entitlement stage. And at that point, they're going to be able to either exit or they can stay in, but it'll be their choice. Then at the second stage or phase of horizontal construction, it's a whole another set of numbers, a whole set of analysis that's done to ensure that the numbers look good in that second stage. And then the same for the third stage of vertical development. And what I really encourage, if you're going to be looking at structuring deals like this, is to do it from that perspective of understanding and projecting each stage all the way from phase 1, phase 2, and phase 3, but doing it and knowing that each one is going to be viable and will stand alone as a viable project. That way you're not taking money from Peter to pay Paul in the end and getting, it's not, if you don't do it that way, it's hard to get a clear picture of what the end result will be. So Chuck, did I explain that well enough?
Yeah, I think so. So fundamentally, we're in the process of wrapping up phase 1, and getting ready to move into phase 2 on this project, given the definitions that Tom explained.
Yeah, and in this case, it was estimated at about 6 months. And so the point being then that investors that came in, they'll be able to cycle out if they choose to cycle out, or they can stay in for the next phase. And by stacking those strategies, I think that you get a more of a better, more clear picture of what really is going on, and it allows for more flexibility as you develop it out. So, and I don't know if, let's see if I'm missing anything on that. Just as far as if anybody's interested in either of those 2 projects, just email me or get back to me and I'll get you information on them. But we set those up in a way, and I think I can share this because this is a closed group, but we like to structure our deals in a way where we do 8% preferred plus another 7% from potential profit share to have a target return of that 15% annualized. So any questions on that, be sure to just let one of us know and we'll get more details on it. Any questions on that stack strategy or how that works, or why one would do that? And feel free to unmute yourself and chime in or wave your hands or whatever you'd like to do. All good? Cool. So then we have only about 5 or 10 minutes left. Let's say 5 minutes. Does anybody have a project here? I'd like to just try one, see if there's somebody here that has courage enough to jump on what we call the hot seat and talk about either a project that they're working on that they might have challenge with, or certain situations they're working on that they could use some help with. So anybody have anything they want to share or jump on the hot seat for? Anyone? Bueller? Caleb, I'm going to put you on the spot. You okay with that?
I don't really have anything. I'm still
Well,
trying to figure out.
I think you do. I think you have the house that we talked about on Friday.
Yeah.
And I know you weren't real solid on the numbers, but if you okay with me sharing a little bit about that?
Yeah.
So it's as I recall, it's a single family home, and what's happening on it, and Bob, feel free to jump in and fill in any of the gap because you were on that call as well. You have a project that is, it's a home that you're living in right now, but you are looking to get it renovated. And if I remember right, it was like a $70,000 purchase price, and it took like $50,000.
Yeah.
And it takes like $30,000 or $40,000 to finish it up.
I was doing the numbers that you had and I had talked about. So if we did 45 for the rehab, which includes the labor,
yeah,
and it would be a total of about a $95,000, and undercutting what the current market is. Well, the current house down the street, my comps are comparable. They're selling for 195. So if I came in at 175,
okay,
that's what I'm looking at.
Got it. And the reason that I thought it might be a good one to talk about was I know that on the call on Friday you had some anxiety about it, or appeared to have some anxiety about it, because it's like, how can I get this project done? Because there's a lot of work to do, and you've got your other business that you have to run and everything. And so what we talked about on the call anyway was that this may be a really good case where you step up one level in what you're doing in the project, instead of you being at the level of the plumber, the electrician, the putting in the cabinets, the floor covering, all of those things yourself. If if you can step it up a notch to where, because time is something that's critical for you as I see it. If you're putting money into that project and you're looking to get the project completed by bringing in the subcontractors and you being the general contractor for it, yes, it's going to cost you more from a dollars per hour if you consider your labor at $20 an hour and you're paying somebody $30 or $40 an hour. But when you take all of that into effect and take the time that's involved to get it to that point and the cost of money during that and the fact that you don't have a completed project, it's not only this project that's taking a lot of time, but it's a lot of the other things that you could be doing with your time. You could be leveraging up your time on the second house in 6 months from now, instead of working on this house for 12 months or however long it takes to get it done yourself. So I really think that it's sort of a shift in mindset of, well, I sure don't want to pay $50 an hour for something that I can do that, and I'm fine with $20 an hour or what. And I'm just making up these numbers, but getting to that mind shift of just getting in there, getting it done, and you may have to share profits with an investor who comes in, a passive investor who has money, but that velocity of the project and the velocity of the money is what really, I think, can make this project much more viable for you. It can take a whole lot of weight off of your shoulders, if I'm reading between the lines here. And it allows you to step right into that next one. And so if you only make half the profits that you would have made on this project, but it takes you a quarter of the time and it allows you to do another project, you're much further ahead by leveraging up that way.
Yeah, and that's where I did consider what we talked about, and I started running numbers differently in my head. That's kind of what I wanted to talk to you about tomorrow on our phone call.
Yeah.
So I'm a member of I'm a carpenter, and I'm a member of the Carpenters Union, the national organization. So I have access to good labor, right? I can get good quality laborers. I just had never thought that way until our last event. So I am trying to shift a little bit. It is a little painful to think of paying
It's
so
super
much money.
painful, yeah, right?
But yeah,
right.
I do want to get get out of this and get into the next project, because
and I think that's especially the case when it's kind of fun doing it, and you kind of like doing it because it's your own project, and you want to be able to say that you did it yourself. But sometimes that may not be the best answer if it's holding you back on the bigger picture. So
right, and I'm definitely open. I'm open to whatever makes the most sense and the most profitable situation. So
let me just inject, if I could, Caleb, too, because it ties into what Tom said, and I'm looking at working with Caleb in some different ways since we're both local here. But your bigger vision is you set some goals in our event the other day that you want to do 3 flips. What was the goal? 6-month goal. And then you want to keep doubling the flips. Yeah, exactly. So what Tom is sharing is launching that, right. Starting to think differently. And so you can get this one done and get on to the next project.
Absolutely.
It definitely is a mindset shift. No doubt about it. I mean, I was in your exact position a lot of years myself. And so it takes some work to get out of that. But once you get into the swing of things and you're really good at managing crews, managing, being the general contractor, that can be a lot of fun too. And it can be very rewarding. So just something that we'll work on that together. But I just thought it might be a good example for other people to hear it as well. So I know that we're going to try and wrap it up now because I do want to try and keep these at an hour and a half. Anybody have any last ahas or things they want to share or something they want to get off their chest before we wrap this up? Bob?
I just want to say this is my first time to join you in this format, and I am so impressed. Number one, with you as the host, it's been phenomenal, Tom. You're a natural, in this role. And it's so good to meet several of you. The things Chuck shared and Arthur shared were fantastic, and others. And we just had Tom speak for us at our event in Oklahoma City, and he did a great job. So thanks for inviting me, and it's good to meet all of you. Appreciate it.
Thank you, Bob. Thank you. I appreciate that. Anyone else? Any last minute shares here? In the meantime, if anybody's thinking of anything here, we are going to be, the goal is to have these meetings the second Tuesday of every month, this same time, which we're really going to try hard next time to have all the messages say the exact same time. I know there were a couple of emails that went out that we got mixed up between Pacific Daylight Time and Pacific Standard Time and Puerto Rico time and Eastern time. So, but I'm glad everybody was able to make it for this event. Really appreciate everybody taking the time. Appreciate all the shares that everyone did. And next time, bring a haves and wants. Be ready to jump on the hot seat if there's anything we can help you out with. And if you liked this event, would love to hear about it, and would love it if you'd share it with other people. There's really something valuable in collaboration and working together. It's the idea that what I call the cycle of abundance, the more we give, the more we get back, the better we can do, so we can give back more and do even better. And it's a cycle that keeps going and going. And so by working together here, collaborating, sharing resources, sharing what we know, we're gonna affect a lot of people, and it makes it a lot more fun and safer to work in business together like this. So yeah, with that, unless there's anything else, I think we're ready to sign off. And I do plan on having these recordings available. And I'm going to talk to my team here and see if we can maybe find a spot on the website to have them posted for members of the investment club. And look, we got somebody coming in right at the last moment here. But yeah, so we'll let you guys know you're on the mailing list. And if anybody has anything they want to talk about independently, certainly feel free to give me a call. And with that, we will sign off until next month. So thank you, everybody.
Thank you.
Hasta luego.